Hello there. Crude oil is down, natural gas is down hard, so perhaps it's time to have a look at energy, including uranium. For more updates on a range of assets, including the general stock market, precious metals, various commodities, a lot of interesting developers with very promising potential, join us at myfinancesteacher.org. The best place to combine some of the market fundamentals with asset price cycles. Now coming back to crude oil, it's down as we had expected, and the last time I discussed oil with you was on the 31st of December. That's near this 50-day moving average over here, and I did mention that we were expecting further declines in crude oil to give you additional buying opportunities in addition to this low in early December. And one of the main reasons for expecting these additional declines is again price cycles. So to learn more on cycles, join us at myfinancesteacher.org. But considering this early December low, that would give you an unusually short cycle on crude oil lasting for only 74 days. The average cycle duration is 160 days over the last several years for crude oil, and the shortest one lasted for 104 days, at least since the middle of 2017. Hence, this early December low wasn't really likely to be the only chance to get into energy trade, as I think it has a good potential in the longer term. So I had mentioned to the members that I was going to accumulate gradually on weakness in crude oil. That's what we have observed a couple of times after that video in early January, and that's what's happening right now. Perhaps crude oil is getting ready to give us yet another cycle low sometime soon, as by now this cycle is already 130 days long. That's not that far from the average duration of 160 days. So perhaps if next week or in the next couple of weeks price pushes a bit further down, I would like to see a couple of pokes below widening Bollinger Bands. All of those might be signs of a cycle low and an upcoming trend reversal into a rally of a new cycle. Looking at the market sentiment on crude oil, that's Crude Oil Optimism Index, we see that it's declined over the last couple of weeks from around 44 down to 37 right now. So there is still space below, so the price can still continue down noticeably. But at the same time, we are pretty low in general on this optimism index. So once the price does turn around, there will be a lot of space above, giving you a nice opportunity with a rally into a new crude oil cycle. In either case, while this is not investment advice, I'm going to gradually accumulate on weakness, as nobody can choose the exact bottom precisely down to the day, down to the hour, unless you are lucky from time to time. Plus, some of those producers do pay relatively attractive dividend yields, so that's something to consider as well. Moving on to natural gas, it's declined quite significantly over the last couple of months. Usually natural gas cycles last for around 119 days. And I think relatively soon we are going to reach another cycle low, and a push back up higher into a new cycle will start, perhaps at least to close this gap from late December. And on the technicals, if you zoom out, you see that natural gas is getting pretty close to this relatively strong support zone from December 2020 low as well as May 2020 high. That would give you a relatively strong support zone somewhere around $2.3. And talking about support zones, to be frank, to be honest with you, back in the beginning of January, I did mention that natural gas might give you a bit of a bounce. That was over here on the 4th of January. That didn't happen, of course. At that time, natural gas was also pretty close to some of these interesting support zones from early 2022 low around $3.50. But at the same time, I also warned back in January that seasonality doesn't really agree with a bounce in natural gas yet. That was in early January. Seasonality shows that natural gas all the way through December and January usually declines sometime into February lows. So perhaps sometime soon over the next couple of weeks, natural gas might actually give us a cycle low, and this time seasonality does agree with that as well. Plus the cycle is now 102 days long, which is getting pretty close to the average duration of 119 days. And looking at the market sentiment in relation to natural gas, it's down in the gutters. The optimism index is at 24. That's below this green line, which usually indicates a relatively nice buying opportunity. So the market sentiment is now at the lowest level in more than 2.5 years, all the way from early 2020. So again, on the natural gas as well, while it's hard to catch the precise low down to the day and down to the hour, RSI has been embedded in this oversold area for quite a while already, all the way since late January and again throughout January as well. So if natural gas touches this support zone around $2.3 next week, that might be a bit of a trigger for a start of a rally into a new cycle. And lastly, looking at uranium, last time we looked at uranium was on the 11th of January, where I mentioned that we've likely seen the end of the previous cycle back into late December, with the cycle lasting for 158 days. That's actually at the exact average for these cycles for uranium over the last few years, with the shortest one lasting for 104 days and the longest for 249 days. Since then, uranium has performed relatively well, breaking above the 50 and above the 200-day moving averages. And looking at uranium producers, on the 11th of January over here we saw a break above the 200-day, and I did mention in that video, which you can have a look at again, that before continuing the rally into the new cycle, we might actually see this gap filled first. That's when I was expecting to increase my positions in uranium producers. That's exactly what I did, and we've seen a continuation of this cycle rally up to RSI poking a couple of times into overbought. Friday gave us a significant drop down to this support zone around $22. That's from August as well as from November highs. But as the new uranium cycle is only 42 days into this cycle, there is a pretty good chance that producers as well, this is URA, might continue to push higher into the cycle after a bit of a correction down into this support zone around 22. And looking at this market sentiment, the ratio of producers to the commodity itself, we see that the sentiment is still pretty low, giving us a bit of a rounded bottom over here. The producers are still undervalued compared to the price of the uranium itself. So while nobody knows the future, this is not an investment advice, I'm just sharing my opinion with you. I think that after a bit of a correction, there is a pretty good chance that we'll continue observing the formation of this a bit of a rounded bottom of producers versus uranium price. And just as I mentioned in my recent uranium report, in the very long term, over the next 2 to 3 to 5 years, uranium is likely to do extremely well, unless of course there's a nuclear disaster somewhere, but let's hope, fingers crossed, it doesn't happen. And for a review of some of the most important fundamental developments in uranium industry, I do suggest you have a look at this January uranium report from about a week ago. That's all for now. Have a nice weekend. Bye bye.